Imagine this, you're at a bank and you see someone walk in with several large bags. They go up to a teller and from these big bags, they pull out these big bundles of cash. Then they immediately get the bank to turn that cash into cashier's checks, a whole bunch of them, made out to different people, different businesses. Would you think something was up? There's a group of people charged in the United States for doing exactly that, laundering hundreds of millions of dollars of drug money through banks for years. And it turns out there's a Canadian bank at the center of it all.
It looks like the hammer's ready to come down on TD Bank, and the penalty could set a new record.
Apparently, according to these reports, fentanyl was involved. Investors not happy to hear about that.
TD Bank is going to have major problems. Major problems.
TD is being investigated by 3 different U.S. regulators and the Department of Justice. It could be facing billions of dollars in fines, and it knows it has major problems. It told nearly 2,000 executives in a recent conference call, it's simply appalling that these criminals were able to break through our defenses, and it is unacceptable that we were not able to stop them. So how were criminals able to funnel incredible amounts of dirty money through TD, and why is TD being investigated for allegedly letting it happen? We dug through reams of court records, media reports, internal communications. We spoke to sources close to the bank to try to get to the bottom of what happened. Let's go through it. Here's part of a mass email TD's CEO sent out to the entire corporation last week. Simply put, our anti-money laundering program did not deliver. We did not meet our expectations or our regulatory obligations to monitor, detect, report, and respond to suspicious activity. Banks are required by law to watch out for things that might signal some sort of criminal activity is happening. The US body that oversees banking regulations lays out a whole list of red flags to look out for, including when a customer has established multiple accounts in various corporate or individual names, and when deposits are structured through multiple branches of the same bank. According to court documents, this is exactly what the money launderers did at TD. For example, on January 20th, 2021 in New York City, agents tracked a group of suspects in a supermarket parking lot and watched as they exchanged at least 5 large bags. Then they followed one of them through the streets of Queens as she went into 3 separate TD branches, depositing large amounts of cash over the counter into different accounts. While all of this was happening, a box truck with the other group members drove around doing the same thing. Investigators say the group deposited over $2.3 million in cash that day alone, without issue. And according to the court documents, that wasn't an unusual day for them. Investigators say they witnessed at least a dozen other days like this, where the group drove around town with thousands, hundreds of thousands, sometimes millions of dollars in cash, depositing it at different branches virtually all day. Spreading smaller amounts of cash around so you don't trigger automatic alerts. The experts we spoke to said this is the dead simplest way to get dirty money into a bank. Banks like TD know this, and yet it went on for years. Banks are also more than just passive receptacles for your money. There is a requirement that they do their due diligence on their customers, especially when a big chunk of money is deposited when the nature of the account holder's business would not appear to justify such activity.
You need to know what products, goods, and services that they have, what jurisdictions they're operating in, what is their volume of sales expected to be, where are they sourcing their inventory from, and so on. And the more you know, the more you're able to determine or risk assess these businesses.
If a business is deemed high risk, or the bank just can't dig up enough information about it, they're supposed to monitor its transactions extra closely. In this case, investigators linked many of the money launderers' deposits to 7 different small businesses, but not the kind you'd expect to be pulling in millions or even hundreds of thousands of dollars a day. They were mostly sewing companies, clothing-related, fashion-related. Also, none of them appear to have actual storefronts or websites. And according to New York State's business database, most were officially registered to this address. It's a warehouse in Long Island. Put simply, prosecutors say they were shell companies, and they should have been at least noticed.
Ignoring their client, monitoring their accounts, assessing their risk is just simply failed.
But what good is depositing heaps and heaps of cash if you can't get it back out later? One way to do that, and this is another big red flag for a bank, is when a customer purchases a number of cashier's checks, money orders, or traveler's checks for large amounts. And in this case, court documents tell us this was exactly what those criminals did. They ordered multiple cashier's checks and had them made out to different people, different businesses, because a cashier's check is certified by the bank and looks way more legit than a giant bag of cash.
If you take that check and deposit it into another institution, it's determined to or thought to be clean money.
Again, the analysts we spoke to say this is money laundering 101, which is why banks are told to watch out for it. And investigators say this group of criminals was doing this a lot.
The amount of cashier's checks that were ordered and personal checks that were issued against cash, it should have raised eyebrows somewhere.
And they didn't even really seem to be hiding it. Investigators say members of this group would often move millions of dollars out of their accounts immediately after they deposited large amounts of cash. And then sometimes they'd see them hand those checks over to their associates inside the bank in plain view. Now, we also learned through court documents that these money launderers had inside help. The lead defendant recently pleaded guilty to bribing tellers to look the other way. To their credit, TD says they caught some of this and took appropriate action to exit people when unacceptable behavior was found. But even if some of TD's employees were corrupted, banks are supposed to have layers of both electronic and human monitoring in place.
You can't train ethics. You can, however, have these systems in place in the background that are still going to detect these transactions.
So it's the responsibility of the banks to notice when they're being exploited. Then they have to report even mere suspicions that something illegal may be happening. They're called suspicious activity reports, and they look like this. There's even a whole section here on money laundering. Suspicion concerning the source of funds, suspicious exchange of currencies, suspicious use of multiple accounts. The banks have to fill all of this out. They send it to the authorities within 30 days. And though TD claims it did report some of this group's activity, the CEO says it was not enough and we were just too slow.
It's disappointing. We should be very well set up to capture and dismantle schemes that are this simple.
Now, to be clear, not all of the money this group was laundering made its way through TD. Investigators say they used other banks too. It's unclear if the DOJ is investigating those banks. But we know that this isn't even close to the only investigation TD is dealing with right now. Just last month, Canadian regulators charged TD $9.2 million, a record in Canada, for failing to file reports on 20 transactions that they say TD should have suspected were facilitating money laundering or terrorism. TD's also set aside about $600 million Canadian in anticipation of fines from another American regulator and said that's an initial provision, meaning there's probably more to come. Some analysts believe the total fines could hit $2 billion US, which, just so we're clear, isn't enough to sink a company that made 15 billion Canadian last year. But it's not just the fine they're worried about.
The indirect costs are more worrisome. The costs of remediation, the costs of fixing the problem. And sometimes that's estimated as being as much as 3 times the cost of the penalty itself.
Last year, TD was set to buy an American bank, First Horizon, for more than 13 billion US. That deal fell through. According to the Wall Street Journal, regulators wouldn't sign off on it because they were worried about the bank's handling of suspicious customer transactions.
this is not the first incident, right? We have Stanford International Bank, which occurred a few years back, where TD Bank was one of the only correspondent banks in the world that would accept what is reputed to be nearly $8 billion in Ponzi scheme funds. All the banks around the world that deal with TD are going to start to ask some serious questions about whether or not interactions with TD will taint their own banks.
Now, we reached out to TD, and they say they are cooperating with all of these investigations, providing documents and video surveillance to authorities, and in the last couple of years, it's put $500 million into its anti-money laundering program. They're hiring new staff, adding training and new technology. But the CEO's message to employees right now, this is going to get tougher before it gets better.